What's happening, guys? Another Sunday video scan coming at you for August 23rd. This time we're going to have a little bit more questions from people that sent them in, as well as a couple things that I had prepared to talk about. We'll get right into scan, and then that's that for this week, just because, once again, a lot of the prep work comes from pre-market. So I haven't spent too much time kind of hammering home, trying to force an A-plus setup. I'm just letting them come to me. And just like you saw, 2 weeks ago we had mRNA. Last week we had PFNE. So hopefully we continue to have these opportunities each and every single week. And I'm going to get into that as one of the main points for today in a little bit. First and foremost, as I say each and every week, all you have to do is like and comment. And you're automatically entered to win either Icon Meals, scans, Momo Trader Book, T-shirts, and IU. So this week happens to be Icon Meals. But once again, that is who I use for all of my meals 3 times a day. Helps me stay consistent with eating. Energy, which allows me to stay consistent with working out, which, as I always preach, in my opinion, will help you stay consistent in the markets, because the more things that you can have that are consistent without having variables all over the place and feeling maybe tired throughout the day and all that kind of stuff, I think the better you end up trading. Clearer the head, less you have to think about. All of that stuff goes to becoming a peak performer. And if you don't have that, if any of those things is off, then it's always going to somehow trickle down and impact your trading. So that winner is Brennan Anderson. So as long as you're in the US, if not, then we'll send you something else, and we'll pick somebody else next week. And then Julian Bellet, you've got the T-shirt this week, because as you guys know, I never can pick just one winner. I always throw a T-shirt out there as well. So I think that's about it. And like I said, we'll always give away different things each and every single week, just because you guys come here and listen and give those key takeaways. So I appreciate you taking the time. It's the least that I can do as a small thank you for those people that show up and are part of this each and every single week. Last week I told you that Phil had a contest going for Traders for a Cause, which is sold out. So this week, Tim Grattani, who has sponsored, also has a contest going, so that you can potentially get up to 4 tickets to attend Traders for a Cause. So that's 4 different people that he's going to be picking. But as with every single year, if you're a sponsor, you get tickets with it. So when we put the tickets for sale, we sold out of them right away. But there are still some sponsors that have some, as well as we've got quite the waiting list at this point. Waiting to see if we end up having any more available, depending on sponsors and depending on speakers and who they are bringing. So last but not least, as far as just kind of recap last week, Friday I actually took the day off. I did have a trade. I traded GOVX. That was the exact trade plan that I wrote on the scan Thursday night. So I just traded that one, and pretty much was for the first time not on my phone all day. Enjoyed the golf outing, and it was good. So it's very rare that I take a full day off. It's very rare that I take the morning off. And so yeah, so that was Friday. SONN, that was another good way to wake up on Friday morning. On Thursday, I pretty much spelled out the fact that the raise is imminent, and whether or not you believed in that, whatever you do, just don't be long, because the risk was so high. The writing was on the wall, and like I said numerous times on Thursday, I felt like it was going to be just like PMCB, and know what you own, be aware of that. You're probably going to wake up unhappy if you stay long. So ended up dropping about 50%, which, no matter what size you had, it was still a great trade. So that worked out extremely well, and hopefully we continue to have a few more of those. I think it's very important to understand exactly that, SONN and this SNOA and PMCB. Maybe not so much SNOA in this regard, but really understanding and knowing what you own. So this week we had a lot of traders in the Traders Lounge, we were kind of discussing about how they banked on particular long setup, and that's all well and great, and it's look, trust me, I love seeing people bank on those types of trades, but you're one step away from giving it all back on these names. And I did this when I talked about a big loss in the past on a video. Actually, it was at a conference in New York. I was giving this example of how I was trading these types of trades, and sure, maybe 8 or 9 out of 10 times I was right and made some great money. But it was that one time that PMCB happens, and you overstay, and you're beyond the proper risk, right? It becomes an edgeless trade, but you're there anyway. And maybe you end up on the wrong side. Maybe it closed really strong and you wanted to have a gapper the next day. Maybe it closed relatively weak and you were like, I was up a lot more. I'll hold it. I'll see what it does. All of those kind of things start to come into play, and then all of a sudden you wake up and you're down 50% on the trade, right? So not understanding what you're up against, not understanding fundamentals right now is catching up to people. It is. And there's been a long time that we haven't really had. I mean, I always worry about it, right? And I only trade these types of setups long, usually for the first move. Once they start to consolidate or have any pressure or any sellers show up, I'm kind of usually hands off. At least with any risk, but we haven't really had to worry about it for quite some time. There hasn't been intraday raises. There hasn't been 50% haircuts the next day for quite some time. There's been raises, but they've been holding. And so it feels like the small cap market has shifted a little bit in that regard to make sure you have your antenna up. If you're trading something that's got crazy volume, this might be their one shot to raise the money. This might be their promotion to raise the capital that they're looking to raise. So be aware of that. If they're running low on cash, if they, they're out of business tomorrow, if they don't have the money, you need to be aware of that. And on the flip side, you can't get too aggressive thinking that they have to on your timetable, because sometimes it takes time. And when you are too aggressive and they don't, you end up on the wrong side of the trade. You guys know what happens. Crazy squeezes, outlier events, black swan. So, understanding what type of market we're in, we always talk about adapting. We always talk about understanding where we're at within certain cycles or themes or sectors and all of that. So, I would say after VRPX, the amount of FOMO market momentum came back like that. Like, bam, next day, everybody's like, all right, I want the next one. And, obviously PMCB starts going. And then you had SNOA. And you had all these different types of trades. And now everybody's mindset, when it goes from, say, 3 to 4 to 5 to 7, or 5 to 7 to 8 to 9, their mindset is 14, 15, 16 in their head, right? They want to catch the next big one. So normally it'd be an obvious sell. It would be like, no chance this continues to go. And now in everybody's mind, well, I sold the other one too soon. I'm not going to do that with this one. And so because of that, it allows them to have such big share scalps, right? So for example, on SNOA, like I was warning about there in the late day, it was just a lot of fictitious volume, back and forth, back and forth, back and forth, trying to create some sort of trap. And of course, that's my opinion, based on what I've viewed, based on what I saw in the tape, in the action. And in my opinion, they were trying to paint a picture that there was still strong demand. But then when it came time for that squeeze, the volume candles just weren't there, right? So they did not get their exit. And when they don't get their exit, they need to use today's liquidity to get out. And so in my opinion, on SNOA, it's just a super thin float. Somebody comes in, buys. Maybe they get stuck. They support it, push it higher, 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 higher. Everybody gets excited. Okay, it's turning into the next big one. And nope, right back down. So you have to understand that when shorts are winning a lot, and shorts are super aggressive a lot, and it's paying off, then usually you have that outlier trade, that outlier squeeze, right around the corner. At some point, one will catch, and one will catch them off guard. When you have all these crazy movers, all these FOMO type movers, all these 100, 200, 300% movers, a lot of them will work, but most of them will fail. And that was the point that I was making in the video after I had a huge loss back in the day at the New York City event that I was talking about. And that was the point that I was making in my room this week is, we start to go more aggressive on all these trades because they're working, but the reality is 90% of those are going to fail, or more, right? We all want the next VRPX, but most of those trades will fail. So therefore, we're up against a 90+ failure rate. And it's just a matter of time of, whether or not we get caught in one or not. Anyone long on PMCB on Wednesday could have been caught in that same drop if they did an intraday raise at $5 instead of overnight. Right? So you have to understand that that's your risk. And if you don't know that that was possible, then, good luck to you. You should know what you're up against. You should know what you are risking against. And just like I don't size much on low floats anymore, compared to what I used to, I don't size much on low floats on the long side either. I try to keep what I normally would trade. I'm probably about 25% full size. Just because I just don't want to deal with the headaches. There's so many opportunities right now that it's not worth it to me to have one of these get away. I don't want to be on the wrong side of VRPX on any size. I don't want to be on the wrong side of PMCB on any size. So I'd rather just wait, let everybody else figure that kind of stuff out. And again, I don't need to use XXXXXL size on this stuff because all it takes is that one, either direction, long or short, to take out all the other good. So the couple topics that I had before I get into the questions that you guys sent in, one was changing your mindset. And, we had this conversation, I think, maybe it was Tuesday after hours in the Traders Lounge. For anybody that are members, you can go back. It was probably about a half an hour conversation, and we were just talking back and forth about, how, I just see people just in and out, in and out, in and out, in and out, in and out. And that's great. And, you can make a couple $100 here and there, maybe a couple grand, something like that, which is great for a lot of people. And everybody has to start somewhere. But the sooner that you start focusing on one or two trades. So I've made a huge shift probably about a year and a half, 2 years ago. And I still trade a lot of names, but I don't remember what video it was. It was a Sunday video scan where I actually said, this is my goal for the week ahead. And I've done it ever since. And the goal is sizing into two names. I only size in, get aggressive, scale in, size in, whatever you want to call it, on two names per day. And that has allowed me to really zone in and focus on which two am I going to, zone in and scale into. Rather than have all these different names going and have one of them get away, I am focused. I am focused on 1 to 2 names max for size. And because of that, it forces you to wait for the right moment. Right? So mRNA last week, right? And then 2 weeks ago, this past week, all I was talking about was PFE, waiting for that PFE trade. You only need that one PF trade per week or per month. And, people would kill for that. People would kill for that. It'll make your year. One trade. Maybe it makes your month. Maybe it makes your quarter, whatever the case may be. But you need to focus in on what that trade is going to be for you. Stop doing this in, out, in, out, in, out, in, out, in, out, in, out, in, out. That's not what you want to do. You want to focus on the big picture move. That's what's going to take you from here to here. That's what's going to give you those exponential returns. Everybody's like, well, if I just make $1,000 a day, then I'll make $250K a year. If I just make, $4K a day, I'll make $1 million a year. Well, guess what? What if you made $30K twice a month? What if you made $3K twice a month? What if you made $300K twice a month? Whatever, it's all relative, right? It doesn't matter what level you're on. It's all the same. 3K, 30K, 300K, it doesn't matter. But whatever that number is, your best trades, focus on making that best trade 2 times a month instead of trying to figure it out and go boom, 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 and just scalping yourself, piking yourself to death. That's not what you want to do. So change your mindset. Think about that. Do the math. If you had your 2 best trades per month, if you just focused in on those, and here's the thing, you missed those 2 trades because you were too busy doing this, right? Back and forth, back and forth, back and forth, back and forth. And the one that you really wanted to nail, it just did what you thought. But you were too busy focused on your micro trades that you missed it. So make sure that you're not too busy on the micro trades to miss those macro trades, those macro events, which is going to really boost your bottom line. Last 2 things. One was China names. I have them on staying familiar right now, but I want to zone in and make that shopping list. What trades are you going to make when Baba bounces, Baidu bounces, JD bounces, whatever the case, PDD, NEO? You should have a bunch of China names that interest you. Maybe your price range, maybe you like the $2 to $3 ones, maybe you like 20, 30, maybe you like 150. But whatever the case is, you should be able to list 5 that you're ready to go. Because when we bounce, it's going to take the entire China sector with it. Or when we capitulate and it keeps on going down and down and down, we have that flush out day, they're all going to go with it too. So make that list and just keep those on watch. Because when the main one bounces, and whether that's Baidu or Baba or whatever it may be, when that one starts to go, it's all going to trickle to the other ones. And you're going to be able to take advantage of that. So make sure that you've got your list ready. And the last thing that I was prepared to talk about was the feedback from last week and understanding how you feel pre-market. And this was an aha moment for a lot of people, because a lot of times you come prepared and then there's just nothing. Thursday there was just nothing pre-market. Friday I took the day off. I still made the trade though, because it was one of those mornings. I wake up, I'm ready, I'm prepared. GOVX is there. GOVX is doing exactly what I wrote. GOVX is gapping up exactly like I wrote. GOVX is coming right into my wheelhouse that I wrote. So therefore I am prepared and I am taking that trade. But had it not gapped up as much, had it just kind of, done whatever in the morning, I'm hands off. Hands off, wait until 9:30, 9:45, 10 o'clock, let things figure themselves out. I'd rather see you 10, 20, 30 cents late than $1, $2, $3 too early, right? So always remember that. Always think about if it's doing what you expected, if it's doing what you prepared for, then there's your trade. But if it's not, hands off. Because you're going to go and put your blinders on, you're going to get that micro mentality that we talked about, and you're going to miss everything else. So put that into your playbook. Make sure that when you come to the market prepared, you feel, the trade's there, and you listen to how you feel pre-market. Because you will find a lot of times, and I figured it out by doing this verbally every single day on the broadcast, right? Where I'm like, what am I going to talk about this morning? There's not that much. Okay, well that's good information. Because normally I'd be forcing a trade off 9:30 a.m. But here I am listening to myself, hey, there's not that much. So now I'm going to wait. I'm going to wait for something to set up. So keep that in mind. Like I said, put that into your playbook, and I really think it will help you stay focused and see a lot better action over the next, couple weeks, couple months as you put it to use. All right, questions sent in. All-day faders, how do you spot them? Which ones will turn versus which ones will bounce back in your face? You can put it on. You can put it on in the morning and go golfing and cover end of the day, perhaps. So a lot of these have to do with a couple different things. One is, what kind of market environment are we in? What kind of, in this case, most recently, I've talked a lot about the influence from social media, right? And so what happens is you don't really know how a particular stock would normally react to news. And I'll give you an example. I think it was GRVI recently. It had news, and it just didn't really do anything. But then it got promoted and pushed and, yapped about all afternoon. And all of a sudden there comes this false sense of a market, right? There's this demand, this newfound demand, right? So that is a false sense of demand that wouldn't have actually been there without, people pushing it, people promoting it, right? So if you look at it the next day, it came apart, right? So it was actually already doing nothing on the news. It was already failing. It was already just doing what it was doing and kind of fading off, and nobody cared. But because of the social environment, social media, that changed for that day. Same thing with GOVX. Nobody really cared about it. It was at like $5, and then social media got involved. So you have to understand who is getting on the other side of the trade. And there are going to be those ones that kind of trap shorts and have that overextension, that next move, etc. So the last piece of that is you need to understand what kind of market environment you're in. So did you just have a VRPX, a PMCB, an SNOA? Is everybody itching to get part of the next one? So they're more willing to pay 6 or 7 or 8 when normally they wouldn't pay past 5. So that is one thing. How many people are on the wrong side of the trade, or future bag holders? How many people are beginning to get on the wrong? Maybe it's going up a little bit more, but where is that demand? Where is that bias? And at what level? And it's a buy at 7 and 8 and 9, and all of a sudden it's at 7. You've got a lot of people on the wrong side of the move. So that gives you a lot of information. But most importantly, understanding which ones have maybe warrants, need money, potentially going to raise, come into prior resistance. I mean, take a look left on GOVX and look where it ran into. A lot of times it will break through those levels pre-market, but they'll still have the issue with them throughout the day. SNOA is a perfect example of that, and we went over that in the room. So there's a fundamental approach, but also a technical approach to both. And once you're on the right side, as long as it's not threatening, to come back up towards your average, then I typically let these things work. If it starts to baseline and go sideways, like ALF this week, then I will go ahead and move on and wait and hope for higher. And if it doesn't, then I'll put it on lower. That's fine. Last Sunday scan, you said swing short a ticker on the backside can be good for beginners to grow a small account. Can you talk more about this? So each morning, 8:50 a.m., we go over kind of some quiet type faders. And these are all trades that I like to put on quietly. I'm not going to alert them. I set it at 8:50 a.m. If you were prepared, you were prepared. If not, then, who cares? And you wait for these stocks to rebound, move into prior resistance from maybe the prior day, and as they start to fade, I'm just joining those sellers. And a lot of times, and I would say probably, not to put a percentage, but 80% of the time, 4 out of 5 or whatever will continue to fade throughout the day, and it's just about risk management on the rest. Now, I haven't actually done those numbers, so I don't know if 80% is an accurate number, but I would say 4 out of 5 of the ideas typically work pretty well. BTBT, CANF, BITF, RSLS last week, CODX, ALT, all these names that you cared about on the first couple days and then you forgot about. The key is just not to forget about them. And if you keep on setting price alerts, you won't forget about them. And when you look back in 3 weeks, you're going to see that BTBT went from 20 to 10. That was $10 per share after you forgot about it, after you gave up on it. And at 13, you were thinking it was going to go back to 10. At 14, you thought it was going back to 10. At 17, you thought it was going back to 10, right? But you get so exhausted from the front side of the move, you say, the hell with it, I'm done with it. And then you forget about it. So don't forget about the ones that give a headache on the way up, because that's all that secondary squeeze. You need to let that pass, and then you get that nice unwind when nobody's looking. So that's what I tell people in the room to kind of keep an eye out for. Find those 2, 3, 4 different names. And the good part about this for me is I can put them on, and I don't need to babysit them. It's not something that I'm going crazy size on. It's not something that I'm going nuts on. But I don't really need to babysit them throughout the day. And by the end of the afternoon, they've just steadily faded. And I'm focused on my 2 main names during the day while these things are working for me. Jim asked if I can go over T+2. I have briefly seen when you discussed it on Sunday Scans a few weeks back, but I was completely shocked to see how it played out this week on PMCB. So they're not always going to play out that well. For those of you guys that didn't watch last week's PMCB, I said that I was interested in for a Wednesday T+2 type of squeeze. So it just so happened that on Wednesday it was up, 300% or something like that. So it worked out well. I was long from 3. Unfortunately, I made it to about 661, if I remember correctly. Sold a little too soon. Got a good piece of the short side. Got another good piece of the short side. But overall, fantastic opportunity. But it was the liquidity trap that we talk about in the T+2. So for those of you guys that don't know what liquidity trap is, you can YouTube Liquidity Trap Investors Underground. It'll come up. It was a prior Sunday scan. You could also look at Project Impact. I did a video on that. Basically, it's when you have this huge volume and then just nothing happens the next couple of days. It goes maybe to 10% of the volume. So say you get 20 million volume to 2 million volume to 1 million volume. But the price holds, right? Not the highs, but it holds relatively well. So on day 1, it was a no-brainer short, faded down, 0 reason to cover. Day 2, yeah, it kind of just stayed sideways, but the volume went from 20 million to 2 million. Day 3, 1 million shares traded. So if anybody had any size, right, where 50,000 shares, 100,000 shares might not be that big of a deal when you're trading, 20 million shares. But all of a sudden you try to cover that, when it's only trading 1 million throughout the entire day, you're out of luck. So if the next morning it gaps up, good luck. And so that's the idea of a liquidity trap, is that you're outsized for the current market, the volume. And when it starts to, compound as a short, you're faced with either eating it and drive the price up more, or, scale into that trade, which many times ends up being a disaster. So the idea is that you've got the buy-ins as well. So it was easy to borrow at a lot of places. So a lot of times you might have a known buy-in coming, and forces people out of their position. Hope you have a good weekend, Nate. I was wondering if you could go into a little bit of detail regarding the trade management on your big picture ideas, FLGC and NAOV. They recently come to mind. How do you define your risk and the process of trading tickers around the core? So as they continue to go, I like to scale into the trade, not on breakouts, only on dips, just like I said on FLGC, which was fantastic, by the way. We hit almost 22, which was last Monday. And then NAOV was another big one. So I like to scale into the trade as long as the thesis stays the same, as long as we don't have a blow-off move. As the blow-off move comes, FLGC, blow-off move came. I sold about 75% of it. Some of it a little early, some of it perfectly, and then obviously I held some, about 25% of it. And obviously I would have loved to sell it at the top, but if it went to 30, I would have been happy too. So same thing NAOV, great trade, great breakout, great gap, great squeeze. But for the management on that trade, I still had a position, and then they did a vote on, increasing the number of shares and things like that. And so now the goalpost has moved, right? And so that wasn't part of my original trade thesis. So I went ahead and just said, the hell with it. I'm going to sell the rest of it. because it has changed from what originally got me in, the potential squeeze, and if there's going to be new paper coming in, then the likelihood of this squeeze potential thesis, although it already has squeezed quite a bit, now it's less likely. And I've done it plenty of times where I say, I'm up a lot, I'll see what it does, and then I overstay. So new Nate, new me is just like, I'm out, and I'll revisit it if it sets up again. But the best way to manage your risk on those is trade the plan that you went into it with, right? So originally, as you guys know, at $10, my goal on FLGC was 15 to 18. So we're at 22. What happens is a lot of times you change your thesis along the way. Well, yeah, I did want 15 to 22, but now it's at 20. Now it's at 21, so I'll hold it because it's going to go to 40. And you just keep on changing and changing and changing. So for me, I like to make sure that I've decreased my risk, manage it, sell along the way. That's why when these things start going, just like you saw on FLGC and NAOV, in those same tweets that I say, huge move, I'm always writing, make sure to manage your risk, don't be afraid to lock in, etc., because that's what I'm doing. Like I don't need to get the very top on all of my size, because more often than not, you're talking about a trade that's going to fail. So I always like to lock in, and if the thesis trades out, then I'm just holding a flyer at that point. Flyer is just, I don't care what it does, and I will hold it until it breaks trend. If it gaps up and it stays heavy, then I'm done with the trade. Last couple of questions. Finding consistency, big losing days. It's 1-0, not 2. Big losing days erase weeks of profit. Do you recommend a max loss, risk control, and DAS? I actually do. And when I was having tough times, I implemented that, and it really stops you from having that drawdown. Now, it's a fix, and it's not good for you to always rely on that, but for the stubborn traders, I'm stubborn myself. I fight it every single day not to be stubborn. But I feel like it should be a number where you can still come to work the next day and not be influenced by it, right? So if it's too big of a loss, then you're going to be down and out. You're going to be, upset, whatever, not confident, and you're going to be trading your emotions the next couple of days. Find that number that does not have an emotional attachment, whether it's 5 grand, 10 grand, 20 grand, whatever the case may be. Maybe it's 500, but whatever that number is a number that you can just come back to work tomorrow, and it's all good. It's not a big deal. And so, like I shared, that used to be 20K, 100K, 200K, whatever that number is, just do it, because, when I didn't have it implemented, a Kodak situation or AMC or something like that, where, a 200 grand loss becomes 500 really fast, or a 300 becomes $1 million really fast. And if you had just cut it off at, X or 2X or 3X, you wouldn't have had that problem. And so risk is everything. Keeping your money is everything. Drawdowns is everything. I mean, you've got to minimize that, because that's the difference between peak performers and, traders that just are doing this as a hobby, up, 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 down, up, 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 down, up, 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 down. So risk management is everything. Best traders I know, no matter what level you're at, 10K, $1 million, 10 million, 100 million, every single trader is the same. The zeros are the only difference. Every single successful trader is the same. It all comes down to keeping those zeros, keeping your account where it is, and not going backwards. Last one is how to know when to stop out versus giving the trade some room to work. So always stick to your plan. You go in, it's doing as you thought, great. If it stops doing what you thought, adjust. You can always size down, you can always get out, you can always get back in. So always stick to your game plan, always stick to your stop. Personally, I don't use hard stops on, when I'm giving wide stops and things like that. I don't use stops at all unless I leave the computer, if I do at all. So for me, my stop is when it stops doing what I thought, what made the trade right. When the trade changes course, when it stops doing what I expected it to do, that means that I'm wrong. So do what you thought when you entered the trade, and you should be okay. Don't adjust it along on the fly, because that's when you run into issues. All right, well, let's get right into scan for today. All right, guys. So like usual, I'm not an investment advisor. These are not buy or sell recommendations. This is for informational and educational purposes only. My goal is to share with you how I prepare for the day, the week ahead, what I do, what makes a good trade for me, what doesn't, and hopefully it will help you in your own preparation for the day or the week or the month ahead. As you've seen, I've spent more time on the first part of scan, just because it's a little bit of a different market, and a lot of it has to do with coming prepared and seeing the action pre-market right now versus having these A plus type setups on scan every single week. So for me, this is a smaller scan than usual, just like maybe the prior weeks, and that's just because I'm condensing everything. I don't need to watch everything. I'm using scan mostly as big picture ideas for the swing trades, as you guys have seen. Some of those just fantastic opportunities. And then, just using scan to monitor situations that are incoming, right? So, for example, China names. For example, the prior week was PFE, Pfizer. Before that was mRNA. So, letting these names that come up on scan kind of slowly set up and come into my wheelhouse. Not every day is going to be the same. Not every day is going to set up the same. But I'm going to wait for them to come in to my wheelhouse, because that's what's working right now. And I don't need to just come in and find a trade. I'm going to wait for them to come to me. So FLGC, the one thing that stood out to me about this one was the number of shares that exchanged hands over here. So we almost had 40 million, which is just below the prior high volume day. So that to me is almost like a reset day, where I want to be cautious. Normally I would say, oh yeah, it's probably just going to fade back. But I feel like this one might have a little bit of staying power, where it could have a weak open, potentially break out a little bit more, or it might just hang around a few days like BTBT, and you're going to forget about it by Wednesday, but I'm not. And so I want to have this on radar. Ideally, it pops to 1350, 14s, hangs out for a little bit, and then we have a nice quiet fade back to 10 or 12. But the key is going to be not to forget about it. Set those price alerts, and whether or not it's a trade for tomorrow, I don't know yet, but keep in mind, it traded almost 40 million shares. That is the second highest volume day, so that kind of is like a reset. And I'll get into that a little bit with KXIN. What kind of makes me adjust my thoughts or think that there is a potential for a reversal based on certain volume candles. TQQQ. A daily dose of this is always great. As always, SPY gaps down back to the highs. Great opportunity. And, I traded this one in NVIDIA the other day. Great opportunity, flushed out. Back to highs, or almost highs, or whatever. Don't come in with a bias, and don't think that you're gonna kill this thing every single day. You gotta wait for those outlier days where there's either panic to the downside or there's a squeeze to the upside. That's where you make your money. If you're trying to figure it out and getting you're gonna get chopped. You can just see how many times this thing just has a midday reversal, right? All these days it's coming apart. You're like, yes, this is the day it's going to unwind. Nope, right back up. So it's a very tough stock to trade every single day. So I typically start in, and I'm always wrong on that feeler. And my second entry is always great. And that's because I have that feeler. I start to zone into the trade. But obviously that can ruin a lot of people if it's not really a starter size. So for me, I like to zone in and wait for those good opportunity days. And again, like I said, I'm going to be hoping, for example, in a situation like this where the market has snapped right back, I'd love to see a gap up on Monday morning, some type of move to maybe 11 a.m. and then I'm going to be looking for a fade back. GOVX, fantastic opportunity. Like I said on the first part of this video, if you look left, you will notice, if I can draw a line, you will notice that it went right into this 740 resistance or so. Let's call it 750 just for simplicity. Yeah, there's a couple days that it pops a little bit higher, but for the most part, it's had an issue at that 750, 730 level for quite some time. So, as I tell everybody, same deal on SNOA. SNOA, we talked about this one in the room. And if you look, it's had an issue with this 980 level, pretty much 10 to 980 for quite some time. And you can see pretty much a peak here. You can even come in a little bit. I drew 2 lines when I talked about it in the room. But you can see this pretty much covers all these peak days. I'm not talking about the outlier move. I'm talking about where it settles. Because it could go as high as it wants, but it's all about, for me, it's all about where it's going to settle. And you can see that every single time it's popped up, it's had an issue with this range. So I knew that I did not want to get too aggressive on the front side of the move until it tested this level, squeeze out, and then as it starts to have trouble with this area, I knew that it was going to run into potential resistance. And then as you saw late day, it stuffed, it failed to squeeze out, and then it just came apart. So that is exactly the same thought process on GOVX. Let it come into that wheelhouse. Doesn't mean that it's going to peak right there, but it's a good starting point to understand where it may have resistance. So with that said, GOVX, higher the better. Quick look is I'd love to see it come right back in and test this prior resistance, which prior support, which may now be resistance. So I'd love to see a 570 to 6 kind of push and exhaustion move, then potentially fading it back again. PFE, I'm keeping on radar. Pretty nice move, pretty nice rebound. It's been a great trader the last couple days, and I ended up having a pretty big move. Go back a couple days here, which we nailed in the room. Offered a little bit more, consolidated pretty well, and this is where a lot of people get in trouble, right? So you can kind of see that there's a channel here. Channel kind of forming right here. So a lot of times after that big move, I think it was Wednesday, Thursday, yeah, Wednesday, crushed that trade. Fantastic trade. Everybody goes back to it the next day, or like, gotta do it again. And then you end up, being patient, and it ramps right back. So be aware of these channels. I always try to find the channel so that I don't have that micro focus or, the blinders on. And I know that there's going to be edge when it breaks out of that channel. But you can see here that it's already gapped up quite a bit after hours, so I think we're going to have some good range. And this could easily continue, 50, 52. Don't think that this has to pull back. I was interested in it just because it was going up and up and up and up and up, and there wasn't really too much of a correction day. So that's why I really got zoned in on it the last couple days. But for the current market, current action, I'm coming in without bias, and I'm looking to join a trend 9:45 to 10 a.m. plus. ALF came back a little bit. This was fantastic on Thursday. Faded that. High conviction trade, looking left, came right into the prior resistance and just faded all day. So that was a nice $2 plus per share trade that I had, and that was from a broadcast plan, pre-market, 8:50 a.m., saying that I was short. I was hopeful that it would test red to green, push out, and then looking to scale. Looking to do the same thing. Hopefully it continues to fade off people's radars. Same deal, DLPN, higher the better, likely fails off or fades off people's radars. I'd be focused on, pretty much this level, this 10-10 level, 10-20 level. I want to see that kind of peaking out, and then I'm thinking that it could potentially fade off. Continuation section, SENS is of interest. It's not, it just looks like it's about to test a big breakout. So we're either going to have a nice gap up and it fades all the way back and maybe comes back to 3, or week opens, it might set up and we have a nice breakout, 354, 450, and we go back up, test towards these highs. And I just think that move is close, and it's either going to make or break. And I would trade either one, because if it does gap up and push and fail, we're going to have 30 to 50 cents to the downside. If it has a weak open, it breaks out, we're going to have 50, 60, 70, 80 cents to the upside. So there's a trade either way, but I don't want to come in with a bias. I just think that there's a trade that's very close. PXLW, I would actually look to potentially join this trade if 420s continues to base as support, and I'd be looking for a 450 to 5 type move. I would not want to own it if it has trouble with 4. And KXIN, I said I was going to talk about this one. I've been long for a couple days now, I think since maybe Tuesday, Wednesday, started in there. And this is that sort of day, 268 million volume. And if you look, it hasn't traded this kind of volume, right? Except maybe this day over here. So to me, this is sort of that day, that transitional day where if you wanted to sell out, you sold out. There's new traders that came in, new buyers, new shorts. And whether or not the trend holds, that's what we find out. So far, it's been holding up exceptionally well. Dips are getting bought. You see the wicks that we talk about. So now I want to see the next stage of the move if I'm going to add. I don't want to just be adding, anticipating that move, because then I end up bringing my cheap average up, and then it starts to pull back, and I'm acting with emotion instead of letting the trade work. So I'd rather see it start to base 370, 380s, and then look to add and risk towards 350s now that there's a new base. Last couple was DATS, D-A-T-S. I haven't really talked about this one much. I did write it in the room one day. I said I felt like there's accumulation here. Somebody's in there soaking it up, and I hadn't had a position at the time. It ended up dipping. It was of interest to me to accumulate dips quietly, and we had a nice little breakout. So I've already locked some in, but we'll see what happens on the rest, and hopefully it continues to go. I'd love to see a good trade here continue, because the higher they go, the better for everybody and everything. Clue. This is another one where this thing always fails, but we had a huge volume day. I got involved over here this day, and it was starting to break out late day, or it was actually holding steady all day, like 250s, and it started to take off to 290s. And I had mentioned earlier in the day that it felt like there was a buyer in the tape, and I reminded everybody not to chase the breakout. This thing fails a lot. But there's no rush here for me. I'd love to add if it continues to hold. But the worst thing you can do, just like KXIN, just like anything, is somebody says, I'm long this, I like this, or whatever, and it pops, and you start chasing. That's the worst thing you can do. Look for it to prove to you that it's holding trend. And so, you can see that the wick here got bought up. So it's kind of starting to prove that it wants to hold. It's still got a lot to prove to me if I'm going to add, but now you have a couple good days of soak, and if it starts to form a base over 270s, 290s, 3s, then we might have that secondary type of move. So that's about it. I've got the staying familiar section as always. Those are some other trades that I will keep an eye on. There's still FULC is still breaking out. We've got Task IPO. BJ's wholesale, BJ, is breaking out from 52 to 57. There's a lot of trades that I want to know about. There's a lot of trades that I have an eye on, that I will set price alerts for, but just not that I plan on trading tomorrow. So that's it. As usual, stay focused, stay patient, and let these trades come to you. I promise you, if you start to zone in and focus on 1 or 2 big names per day, per week, per month, it will change everything for you. It'll take you out of that micro mentality, and you will learn the tools that you need to exponentially grow later, right? Otherwise, you can do that, but you're going to have to unlearn everything that you're doing. And, for me, it's a much more relaxing, less stressful style of trade. I've done all the types, and this is kind of where I've ended up. But, everybody's different, and, obviously you got to find out what works for you and your personality. But I definitely promise you that if you spend a little bit of time finding out what you're best at and focus on being the best at that, you will do a lot better. So that is it. We'll see you guys in the room, and enjoy the rest of your weekend.